Well, private markets have seen positive momentum as capital allocations from institutions grow. According to McKinsey & Company, undeployed private fund capital has increased to $3.7 trillion, leaving a lot of opportunity within the private market. Here with more on this, Morningstar CEO Kunal Kapoor, Morningstar also just reported earnings. Kunal, thank you so much for joining us. So you're looking at, obviously you guys run a big data business, and part of your data is on public markets, and increasingly a lot of it is on private markets. So talk to me about where you are seeing growth right now.
That's right. We own PitchBook, and so we have a unique vantage point across public, private, and VC. And clearly, if you look through the past few years, the trend has very much been an expansion in the private markets. On your program, too, you've talked about the fact that companies are staying private longer, fewer have IPO'd in recent years, and so the appetite to invest in a swath of companies that previously might have been public but are not for multiple reasons today has increased. Add to that the reality that so much of the debt that is being sourced today is coming from sort of what I'll call non-traditional lenders, at least in the sense that they're not coming from traditional commercial banks. And as that number grows, you have private credit expanding pretty meaningfully as well. And so if you're an investor and you think about your portfolio, it's natural that you're starting to ask questions as to how you can invest in swaths of the market that maybe up to this point were largely available to institutional investors.
And why in broad strokes, why would I want that kind of exposure to private markets, in your opinion? I mean, you could look at the public markets, they seem to be working pretty well for a lot of people right now.
Yeah. And I think that's fine. And I think for a lot of investors, that is probably just fine as well, because there are clearly some downsides investing in private markets, including the fact that you have less liquidity. You clearly have a more complicated tax situation if you're going to invest in private vehicles. But what's changing is that these problems are being solved. And why you might want to invest kind of goes back to my earlier point, which is that there's an increasing concentration of companies in the public markets and an increasing expansion of companies in the private sphere. And so you certainly, to the extent you're interested and you understand what the downsides are, I think it's worth taking a look. And the vehicles are now arriving that will make it easier for the average advisor, for the average investor to start looking at these. But for sure, you're right that you don't have to do it. I think it's just in the context of building a broad, diversified portfolio, it's not a bad idea to be thinking about it.
Where are you seeing the most demand right now, both for data and sort of for asset management services?
Yeah, when I look across, the reality is that there's an insatiable appetite for data. And right before I came on, you were talking to Salesforce executive, and she was mentioning that to train a model, you need the inputs to work, because then the model's reacting to the inputs. And a big part of the inputs is content. And we see demand for more and more content, obviously. But the way we think about it is really through the lens of an investor. And I'll go back to your earlier question about the expansion of private markets. The reality is we build out our data based on what the investor is putting in their portfolios, because we want to demystify the investor portfolio. We want to provide research and ratings on those portfolios. And where we're seeing more and expanding demand is in this convergence between public and private, if you will.
Another trend we talk a lot about this show, no surprise, the mega trend of AI. I am curious how you see that technology impacting investing, both now and what you would forecast ahead.
Yeah, I mean, it's clearly a big deal. It's going to be important. I wouldn't say that anyone has sort of cracked the nut, so to speak, and kind of come up with something revolutionary just yet in the investing space. But I think about it, from the angle of taking away friction and making processes that exist today even faster and better. And so a simple example is generally if someone is, let's say, going into Morningstar.com, they're using a screener to try to determine what their next investment might be. In the future, do you need a screener? I would argue probably not. You can go straight in and interact with the AI chatbot and basically get to the answer that you need in terms of what types of investments you're looking for. And so the ability to take that friction away is going to be great. And I think, too, it's going to bring in more and more folks who've thought that investing is pretty daunting, it's likely to make them investors as well. So while I wouldn't say that there's one revolutionary application today, it's, I think, all about taking away friction so it's easier for people to be investors.
Well, it's interesting that you say that, because I would argue, passive funds have made things less daunting, right? So how would you compare this innovation to that kind of innovation?
Yeah, passive funds have made things less daunting. They've also made things less personal. And I think when you match what we have and the way we're investing in data and you think about the future, the technology is increasingly there for where you and I, whether we use passive, active, what have you, we can then personalize in a more meaningful fashion. So you can take something like the Morningstar US Market Index, and maybe, let's say, you work in the financial services sector, and you want a version of that index, but without financial services exposure, because you're so heavily exposed from a human capital perspective. You can start doing that at a very personal level today in a way that you couldn't at scale in the past. And so you're right, the barriers have been lowered, but the barriers to personalizing further and connecting people to their investments are still being lowered.
Kunal, great to have you on the show today. We covered a lot there. Thanks for joining us.
Sounds good. Thanks for having me.